Hi, I'm Bob Power, and we're pleased to be joined today by Sonya Ghobrial, Director of Investor Relations at Heineken, which trades on our OTCQX Best Market. Sonya, welcome to the Market Center.
Thanks very much. It's good to be here.
Thanks. Well, tell us a bit about Heineken's investor relations strategy.
I think the way I describe it is it's changing. I think the focus in the last 3 years certainly has been on a lot more visibility to the external world and educating in terms of the strategy and practice. I think to put it in context, it's probably useful saying that we have transformed our footprint over the last 15 years. We did 3 major transactions: Scottish and Newcastle, FEMSA in Mexico, and then also APB in Asia. And that has essentially transformed the footprint, so we now earn about 60% of our profits from developing markets. So we think, for us, that's the right balance in terms of growth and stability. Second thing we've done, I think, is we're a bit more portfolio focused than we were historically. Heineken still very much a flagship brand, name on the door, and certainly our largest brand in terms of contribution. But at the same time, there's very much a recognition we have over 250 other brands. We have some fantastic international brands that can travel across regions. We have a premium bias, so I think we're ideally placed in terms of capturing growth going forward. Third thing I'd probably say is we changed the way we guided the market. So we moved to giving them margin guidance back in 2014. So there's been a process in terms of updating externally how we've been doing. And then finally, I think I'd say culture slightly evolved as well. So whereas historically a lot of the senior hires were internal, you're increasingly seeing external expertise brought in-house. Our CFO joined last year from JC&Co. And also, you're seeing talent that came on board from the acquisitions moving throughout the organisation. So I think truly international in terms of the way it's managed, and that's perhaps slightly changed as well. So that's kind of how the strategy in terms of IR has been educating the external world, explaining the strategy of Heineken. Going forward, still very much it will be showing that and being accessible, being visible, but also showing how that strategy adapts in terms of adapting for innovation, in terms of what do we do to address craft, and how do we address the consumer who wants more choice.
Thanks. Heineken recently reported 2016 results. Would you like to talk about those numbers?
Yeah, I think they were good numbers. And I think what's impressive is it was in the context of a tough macro and also some pretty significant currency pressures working against us. If you look at the numbers we delivered, 4.8% organic revenue growth, 9.9% organic profit growth, margin expansion of 54 basis points. Ahead of the guidance, ahead of what the market was expecting. And for me, I think the big message is the footprint is working in terms of that split of growth and stability. What you saw was that Africa, Middle East, Eastern Europe, which traditionally has been obviously a developing area, under considerable pressure, given Nigeria is our biggest opco there, and you had a currency devaluation. You saw the rest of the footprint compensating for that. So Asia Pacific, the growth particularly in Vietnam, being very, very strong. Americas, the growth coming through in Mexico, also helping and being impressive. And then I think even Europe, which everyone has always been a bit more lukewarm on, given the structural dynamics, positively contributing to the group. So for me, a real sort of testament to the strategy in practice working and showing that it can deliver results.
Sure, and talk about your outlook for 2017.
I think we're expecting a macro to continue to be quite challenging. We're certainly expecting currency pressure similar to last year, so we're not expecting anything to get any easier. We have said we'll continue to deliver organic profit and revenue growth. And we have also said on the guidance front that excluding major unforeseen macro and political developments, and also the acquisitions we announced in the last 6 months, so the proposed transaction in the UK and also the transaction in Brazil, that we will deliver margin expansion in line with the medium-term guidance, so the 40 basis points.
Well, there's been a lot of consolidation in the beer sector. Does the company feel the need to do deals to compete with its largest competitor? And what is the company's strategy regarding mergers and acquisitions?
Yeah, it's been a busy sector for consolidation. We're now number 2 globally. We're a much smaller number 2 to number 1. I think first thing I'd say is we don't need to do deals just for scale's sake. Our strategy typically is to be number 1 or number 2 in a market. Having done the big 3 transformational deals that I mentioned earlier, I think it's less obvious what the big deal is we need to do here. At the same time, there's still small, medium-sized transactions we can do that fit with that overall strategy. So, for example, in the last 6 months, we announced that we were buying the Kirin assets in Brazil. For us, that certainly will take us to being number 2 player in the market. But importantly, what it does is it gives us scale in a market where we see exciting opportunities, and particularly exciting opportunities to premiumize the portfolio and take forward the Heineken brand and the other brands in the business. Similarly, consistent with that strategy, I've talked about Punch, somewhat different transaction in Europe. In the UK, our biggest market in Europe, we already have 1,049 pubs, which we've historically said strategically important. We have an expertise running them, and we announced in December the proposed transaction with Punch to acquire another 1,900 pubs. I'd mention these two examples probably.
Thanks. Heineken has been traded on our OTCQX International Premier Market since January of 2014. Can you talk about your experience on OTCQX?
Yes, I think I'd say the experience has been positive. I think it's important we do have a way for US investors to invest in the company and the story, particularly if they can't access it through our listed shares in Amsterdam. So ADR program for us has been important. OTC has enabled us in terms of giving us extra credibility, giving us more visibility in the market over here. And as I've been learning earlier on today, there's a lot more we can do. So I think that's quite exciting as well.
Well, thanks, Sonya. Thanks for visiting with us here at the Market Center, and we wish you and the company continued success.
Thanks very much.
Okay.
Thank you.